Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is our daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A bullish piercing line pattern yesterday as the market dipped down through the supports below of the short medium moving average, currently 109.24, the congestion in the 108.68 to 108.22 area, this small congestion band dating from July 2014 between 106.79 to 107.46, but not making it down as far as the next congestion area below, and that's the heavy congestion band between 101.55 to 103.34. Why did it not get down that far? Well, I suspect it was the attrition the market received on its way down that eroded the bearish incentive and caused the bullish pattern in the end. Prices ended the day just over the light resistance at 111.06 and under the other light resistance at 113.04. Overhead, we have a wider congestion band between 115.70 to 120 even. Now, previously, I had started to look at potential targets on the upside for the recent descending triangles we've seen in this market, as well as the double/triple bottoms for the larger March to April descending triangle. I had a potential target, primary target X1 in the 132.10 area, with a harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a potential primary target X3 in the 120.5 area, with a harder to get secondary target X4 in the 129.20 area. For the double/triple bottom pattern, I had a potential target X5 in the 126.5 area. Okay, have you got all of that? Well, for all that detailed work I'd done to lay out the potentials on the upside, it actually seemed these patterns are stillborn, and instead, the action since early April could instead be seen as a possible rectangle pattern in construction. Now, I'm not sure on all this as yet. I'd like to see how it and if prices manage to deal with the downside over the next few days, but I have already put all the proposed targets topside on probation with a view to possible retirement. If things do not show up soon, then all the X targets will become redundant by the middle of next week. Now, so far today, a lower open for a small dip below the light support now at 111.06 before a move back up towards the light resistance at 113.04. Spot gold. An interesting bullish white Maribozo yesterday after the previous session's indecisive doji cross. The market seems to have finished its recent stabilization just under the slowly rising long moving average, currently 1839. At the moment, it does not look like a pause for breath before maybe attempting a further move lower, as I initially suspected, but instead it seems to be a pause before a pullback up, notably over the long moving average. It all now depends on what the market does when it reaches the upper time, currently at 1860, of the early March to late April bearish Andrews pitchfork. Now, this big bearish Andrews pitchfork is still the showrunner here. Now, above this, we have the 50% Fibonacci line of the March 2021 to March 2022 move at 1873, and the flatlining medium moving average currently at 1887, just above that. So far today, a seeming settling down just over the long moving average after an earlier attempt to pierce it failed, but prices are still sitting short of testing the upper time right now. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the written disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.